The Peter Schiff Show.
Today's podcast is sponsored by Mint Mobile. Get your new customer offer and your new 3-month unlimited wireless plan for just $15 a month at mintmobile.com/gold. Additional taxes, fees, and restrictions apply. Today's podcast is also sponsored by Masterclass. Learn from the best to become your best with Masterclass. And right now, our listeners will get an additional 15% off an annual membership at masterclass.com/gold. All right, everybody. It is Sunday night. It's been over a week since I did my last podcast. I was traveling for almost the entire week, was in Florida, so was a bit busy, and so I didn't really have an opportunity to do a podcast, although there was a lot that went on during the week when I was away, and so I'm going to address all that in this evening's podcast. Now, the month of March came to an end on Tuesday of last week, or April rather, came to an end on Tuesday. And it ended on a very sour note for the U.S. stock markets. I mean, the Dow was down better than 500 points on that Tuesday. This was the day before the Fed was going to come out with its decision on interest rates. And it was a bad month for U.S. stocks. All the indexes were down. It was the worst month of the year. In fact, the Dow lost about 5%, almost 2,000 points on the month. That was the biggest monthly drop in the Dow Jones since September of 2022. Other risk assets, Bitcoin was clobbered in April. In fact, I think it ended April down about 23% from its peak. I mean, Bitcoin had got up almost to 74,000, and then it sold off to close to 56,000, below 57,000. So the markets were really selling off. And the reason for that was heightened talk, not just about the Fed not cutting rates, but for the first time, I heard people discussing the possibility that the Fed might have to raise rates, that the next move may, in fact, be a hike and not a cut. Now, that's the first time that I've heard any mainstream discussion of that possibility. Now, of course, I've been talking about that possibility for a long time. In fact, I've been saying that that is the correct policy. If the Fed really is data dependent, and if the Fed really wants to fight inflation, based on the data, they should resume their hikes. But I've been saying they're not going to do that because the markets can't handle that. In fact, that's why they stopped hiking. It wasn't because they succeeded in beating or winning the war against inflation. They had to surrender the war against inflation because if they kept waging it, they were going to crash the economy. They were going to crash the banking system. So they stopped. They called it off. But of course, they pretended that they were calling it off in victory rather than admitting that they were doing so in defeat. But even though I've known all along that the Fed should be hiking, I knew they wouldn't. Well, now Wall Street was contemplating the possibility that the Fed might hike. Now, I knew that they weren't going to do it. I still believe that no matter how much evidence comes out that shows that they should be hiking, they won't do it. But the markets were afraid of it because we got even more bad inflation data that came out. And at the same time we were getting the bad inflation data, we were getting weaker than expected economic data. So not only were they talking about the possibility of the Fed hiking rates because inflation was not going down, in fact, it was headed back higher, but they also spoke about the possibility that they would be doing so with a weakening economy. And so more talk about stagflation, which I discussed in my last podcast that I did, 9 days ago. So the drumbeat for stagflation was growing larger and larger, and that's bad for stocks. I mean, stagflation is a horrible environment for stocks, and so the markets were going down. Now, I believed, and I said this, in fact, I went out on X, and I posted it before the Fed meeting, that I believed that Powell was going to come to the rescue of the markets, that he was going to fly in there on a big white dove and take the possibility of a rate hike off the table, because that possibility was weighing on Wall Street. And not only did I think that he was going to take a rate hike off the table, but he was going to make sure that the rate cuts are still on the table, that he was going to reassure the markets that lower rates are appropriate and that it's not a question of if rates are going down, but only a question of when. And that is exactly what Powell did, which is the reason that we saw a huge rally on that Wednesday in the risk assets that had gone down so much based on the possibility that the Fed might hike. And that includes Bitcoin, in addition to stocks, which had huge rallies. Gold, on the other hand, went in the other direction. Gold sold off because Wall Street all of a sudden was risk on. It was as if everything was awesome all over again. Once Powell came to the rescue and said, you don't have to worry. Everything that you've been worried about for the last several weeks, there's no reason to worry about it. No hikes are coming. We're still going to cut. We don't care about this inflation data being higher than expected. I mean, yes, it's higher than expected, but we're not worried. Right? We believe that it's going to come back down. So it's just a few months delay, but our base case scenario remains unfazed by this. We didn't expect the data to come in hotter, but despite that, we still believe that inflation is coming back down to 2%. And the markets, by and large, still believe the Fed. I mean, if you look at the break evens between the tips and the treasuries for 30 years, the markets expect inflation to average about 2.35% for the next 30 years, which means they're pretty confident that most of those 30 years are going to be around 2%, because we're higher than 2% right now. In fact, we're higher than the 2.35. So the markets believe that the Fed is going to succeed. This is pure nonsense. Again, I look back at the inflation statistics for the 40 years before the 2008 financial crisis. So 2008, 2007, going back to 1968, those 40 years, there were only 3 years where inflation was 2% or lower. The average inflation rate over those 40 years was 4.8%. Now, if that was what the Fed achieved during those 40 years, when we were in a much better fiscal position than we are now, we didn't have anywhere near the deficits that we have now. We didn't have anywhere near the national debt. We weren't printing anywhere near as much money. If the Fed wasn't able to come close to 2% during those 40 years, why does anybody think it's going to come anywhere near it over the next 30 years? Again, the markets are completely mispriced. They believe that what happened from 2009 through COVID, that's the new reality, that the artificially low rates that the Fed was able to achieve during that period of time are now the new normal, and they're going to continue, for the rest of the time. We're going back to a more normal rate, and rates need to be much higher to be normal, given the abnormal amount of debt that we currently have. But getting back to the point that I was making is that Powell came to the rescue by taking all these worst case scenarios off the table that were causing so much consternation in the stock market. And so this was a huge relief rally. I think there was a lot of short covering as well in that rally. And a couple other aspects that were significant for the stock market. Powell, as I have been forecasting, reduced the amount of quantitative tightening by about 5 to 10 billion a month more than the markets thought. And I think he also accelerated when that reduction would start. I think it's starting next month. the Fed had been doing $95 billion of quantitative tightening every month. They were selling off $95 billion of their balance sheet, treasuries and mortgage-backed securities. They are now tapering that down to just $60 billion. Now, given that inflation has been coming out hotter than they believed, why would they do that? Why are they going to fight inflation less vigorously by shrinking their balance sheet more slowly if inflation is still a bigger problem than they thought, right? It doesn't make any sense for them to have reduced the size of quantitative easing at all, especially when Powell is still sticking to his forecast that the economy is great. In fact, one of the things that Powell was asked about during his press conference was about stagflation, because it's been in the news. And so one of the reporters asked Jerome Powell, well, what about stagflation? And his response was, I have no idea where all this talk is coming from. He said, because to be honest, I don't see any stag and I don't see any inflation, right? So the markets or whoever is talking about this, they're wrong on both fronts. There's no evidence of either one. So how could you be talking stagflation when we have a strong growing economy and we have low inflation, right? Well, if that is the case, then why are you shrinking or reducing quantitative tightening when inflation is still above where you want it to be, and your goal is to bring the rate back down, and you think the economy is so super strong? Well, why does it need this extra help? The reality is that Powell is trying to rescue the markets. He already sees the problem in the bond market. Interest rates have been rising. Long bonds have been backing up the rates. And that's why the Fed is doing a reduction in quantitative tightening. And that is simply the first step to the elimination of quantitative tightening and the return to quantitative easing. In fact, what I've been saying all along is it's very likely that the Fed goes back to QE before it cuts interest rates, because I think the more important rescue that the Fed is going to need to embark on is going to be the yield curve and monetizing government debt as more and more selling pressure comes in to the U.S. Treasury bond market. And that will happen when we start to see a crack in the dollar, which we haven't seen yet. So the world is still, convinced, right? They haven't come to terms with the reality of inflation yet. And you can see that again in these break-even spreads with the tips and in the dollar's exchange rate against the yen and against the euro and against the pound. In fact, the weakness of the yen last week, the Japanese yen, it almost went down to 160. I mean, almost hit 160. And there was some intervention by the Bank of Japan in order to lift the yen off the floor. But this yen weakness has spilled over. It's helped the dollar against the euro, against the pound sterling, against all the Aussie, against the Canadian. I mean, the dollar going up against the yen has helped the dollar against other currencies. But at some point, that's not going to happen anymore, and the dollar is going to fall, and that's going to create a much bigger problem for the Fed and the economy. I got a quick commercial break, so stick around. We'll be right back.
My favorite part of spring cleaning is the clarity afterwards, making me wonder, how have I been living like this? It's kind of like finding out that you've been overpaying for your current wireless plan when Mint Mobile offers plans for just $15 a month with the purchase of a 3-month plan. It's time to switch to Mint Mobile today and enjoy unlimited talk, text, and data for just $15 a month. In fact, when it was time to get my son Preston his own phone, Mint Mobile was the perfect choice. Forget about the steep monthly fees and overages that you get content with your current wireless plan and make the switch to Mint Mobile's premium wireless plans, starting at just $15 a month. Choose any Mint Mobile plan, which includes high-speed data with unlimited talk and text on the nation's largest 5G network. You can even keep your current phone and number when you switch and bring over all your existing contracts. Ditch overpriced wireless with Mint Mobile's limited time deal and get 3 months of premium wireless service for $15 a month. To get this new customer offer and your new 3-month unlimited wireless plan for just $15 a month, go to mintmobile.com/gold. That's mintmobile.com/gold. Cut your wireless bill to $15 a month at mintmobile.com/gold. $45 upfront payment required, equivalent to $15 a month. New customers on the first 3-month plan only. Speed slower above 40 gigabytes on unlimited plans. Additional taxes, fees, and restrictions apply. See Mint Mobile for details.
All right. Now, I don't think it was an accident either that Jerome Powell rescued the stock market. I think that was his job. I think had Powell not taken the rate hikes off the table, we would be looking at a much lower stock market right now. And of course, Joe Biden doesn't want that. So the Fed needs to do something to prop up Biden's sagging approval rating. So they had to do some kind of damage control over that narrative that was starting to spread. And so they had to push back. But if Powell had said, yeah, we might have to hike rates, that's possible. We're kind of talking about hiking rates now. I mean, it would be a whole new ball game. In fact, another thing that Powell mentioned during the press conference is he continued to reiterate the false point that Fed policy is restrictive and that it's working. It's doing its job, that it is bringing down inflation. It is not. All of the economic data that has been coming out shows that it's not. And the reason that restrictive monetary policy isn't working is because it's not restrictive. And that's why it can't work. And the way restrictive policy is supposed to work, it's supposed to make it harder to borrow money. And so fewer people are supposed to be borrowing. And so spending is supposed to be coming down because so much of our spending is financed with debt. But that's not working. People don't care that interest rates have moved up. They keep on borrowing more money anyway. The U.S. government doesn't care, right? It keeps on borrowing more money. And Powell, of course, isn't going to criticize the government for borrowing money. No. He thinks that the government is beyond criticism. He thinks that an independent central bank has to keep its mouth shut, that he's not allowed to criticize deficit spending. Not only is he allowed to do it, he's really required to do it. That's the whole point of an independent central bank. So you can criticize the government when it makes a mistake, not hide behind your independence and fail to criticize the government. I mean, Paul Volcker was Congress's biggest critic, right? He pointed out that Congress needed to cut spending or raise taxes, right? He didn't even make a political statement as to how the deficits need to go away. He just said, you guys got to get rid of these deficits. You want to spend money, you got to raise taxes. And if you don't want to raise taxes, then you got to cut spending. You got to do one of those two things because you can't keep running these deficits because there's going to be inflation. That's what Powell should be saying, but he doesn't want to say it. As he doesn't want to do anything to push back against inflation. But also, I want to go over some of the economic data that came out, just last week. Some of it before Powell spoke and some of it after, but all of it confirming stagflation. I think Powell's statement that he doesn't see any stag and any inflation, right? And everybody is crazy, right? Who's talking about this? This is another one of those statements that's going to go down as a massive blunder, just like subprime is contained and inflation is transitory. Right? I see no evidence of stagflation when the evidence is flashing in your face. I mean, you have to be blind not to see the stagflation. But so here's some of the data that Powell is oblivious to. So we got the Dallas Fed manufacturing. That was for April. That came in at minus 14.5, which was worse than a minus 14.4 for the prior month, and worse than the um, 11.3 that they expected. That's one data point. Consumer confidence in April just plunged from 104.7 in the prior month, which was revised down to 103.1, but it collapsed down to 97. That's a low number. They were looking for 104. That's a big drop in consumer confidence, and it's obviously happening because of the weak economy. The Chicago PMI was a complete disaster. It was at 41.4 in March, which is a really low number. They were expecting it to improve to 45. Instead, it crashed down to 37.9. I can't even remember when. I mean, that must have been during COVID lockdowns, the last time we had a number that low, right? When the economy was shut down. I mean, the consensus range for that PMI was a low of 43.2 to 47. We came in at 37.9. I mean, that is a massive miss for a key economic number. Yet Powell still says, oh, there's no evidence that the economy is slow. No, everything looks great. Now, we also got the ISM Services Index, right? The big part of the U.S. economy is the service sector, right? That was at 51.4 in March. They were looking for an improvement to 52. It went down to 49.4. Anything below 50 is contraction. So now we've got a negative number, a contracting number for the service part of the economy, which is by far the largest part. How can you ignore that? How can you say there's no evidence of stagflation when you're seeing a contraction, right, in the service sector? But it's worse because the prices paid component soared in that ISM number. And in fact, the market has kind of reacted to that. Gold sold off. Gold still holding support around 2,300. It got below it a little bit, but it didn't stay there for long, and it's a little bit above it now as we're talking. But there was a knee-jerk reaction. The market's focused on the hot inflation numbers, but ignored the reality that it doesn't matter. I mean, it's cold, and so that sidelines the Fed. The Fed's not going to fight inflation when the economy is tanking. I mean, it already stopped the fight before, right? When the economic data in the Fed's mind was strong, when the labor market was strong, the Fed stopped hiking, even though the evidence is clear that it needs higher rates, but they stopped hiking. Well, if the economy actually rolls over in a meaningful way, there's no way the Fed is going to raise rates no matter what inflation does. That's what the markets still don't understand. We also got the JOLTS report that came out. These are job openings, a big drop there in job openings. They were looking for 8.7 million. It went down to 8.488 million, down from 8.813 million. So the number of jobs available took a hit. Also, the announced layoffs, challenger job cuts, another big number, not as big as the 90,000 from
I've spent my entire career dedicated to learning and mastering my skills in finance and economics. If there's a skill or topic that you want to master, wouldn't it be great to learn from an instructor who has the same dedication in their field? With Masterclass, you won't need to question the quality of your learning. You can be confident in what you're learning. With Masterclass, you can learn from the best to become the best, anytime, anywhere, at your own pace. I'm working with Masterclass, and we have a deal for you. Right now, our listeners will get an additional 15% off an annual membership at masterclass.com/gold. Masterclass is the only streaming platform where you can learn and grow with over 200 of the world's best. For just $10 a month, an annual membership with Masterclass gets you unlimited access to every instructor. And you can access Masterclass on your phone, computer, smart TV, or even in audio mode. Prioritize like a boss with multimedia icon Elaine Welteroth. How to invest in the stock market with Wall Street's best, or build a billion-dollar company with self-made billionaire Mark Cuban. And the classes really make a difference. 88% of members feel that Masterclass has made a positive impact on their lives. Plus, every new membership comes with a 30-day money-back guarantee. Don't wait another moment to start your learning journey with Masterclass. And right now, our listeners will get an additional 15% off an annual membership at masterclass.com/gold. Get 15% off right now at masterclass.com/gold. Masterclass.com/gold.
Right. So we're looking at the weaker than expected April non-farm payroll report that sparked another big rally on Wall Street, another risk asset. So they were looking for 243,000 jobs, which would have been a slowdown from the prior month, which was revised up slightly to 315,000 jobs. And we ended up with 175,000 jobs. So well below consensus. In fact, below the lowest estimate. The range was 190,000 on the low side to 303,000 on the high side. But I take the number with a grain of salt anyway. You know, if you look at the birth-death model as an example, and I've talked about that. What is the birth-death model? The birth-death model is where the government just guesses the number of jobs that were created or destroyed based on new companies that just started up and they haven't really reported yet. So they don't know. So the government just assumes that during the month, entrepreneurs decided to start new companies and that those new companies hired people, but they just don't know about it yet. So they just guess a number. And so how do they know? And of course, I think they're always overly optimistic, the government, guessers. And so they generally assume that businesses started up and hired people. That might not be the case. Maybe businesses didn't start up. Maybe they closed down. Maybe the birth-death model actually should show deaths, jobs being killed, not jobs being born. But according to that model, they guessed that over 300,000 jobs were created, right, by these new businesses that came into existence. Well, what if they didn't? What if those jobs aren't there? How the hell do they know? But the number of jobs that they just guessed were created is about double the number of jobs that they actually claim were created. So if they didn't guess that high a number, there would have been no job creation. I mean, maybe jobs were in fact lost during the month, but they didn't report the loss because of that guess, right? Now, eventually they go back and they adjust it. Months and months into the future, they go back and they kind of fix the guesses. But by then no one cares because no one even looks at those revisions. They just look at the month where the phony numbers get out, and they're in the headlines. So who knows if any jobs were created at all? But again, the type of jobs that we continue to create are low-paying part-time jobs going to people who already are working one or two jobs. The unemployment rate ticked up to 3.9%, still below 4%, but it may not stay below 4% for long. In fact, it could be well above 4% by election day. Now, obviously, they're going to try their best to keep that number down there for Biden. But the report overall was weak. The only number, I guess, that maybe, or the weak number that the markets also liked, was that average hourly earnings were up slightly less than expected, 0.2 versus the 0.3. And year over year, earnings were up 3.9 instead of 4, and the prior was 4.1. So I think the market's like that because I thought it means less inflation. Not really. What it means is that the workers are going to have a harder time dealing with the inflation because their wages are not going up quite as much as prices, or they're not going to get as big a boost. And in fact, hours worked, the work week shed a tenth. It went from 34.4 to 34.3. But again, this is more evidence of the stagflation that Powell says he doesn't see any signs of. In fact, we got market news that should be an eye opener from Starbucks. Starbucks reported really bad earnings and guided down, and not just in the United States, but pretty much all around the world. Starbucks is having a problem with selling coffee. And so the price of Starbucks stock was down about 15%, I think. This was on Thursday. It was down a little bit more on Friday as well. It's off about 33% from its high, and it's back down to where it was in 2019. But what's really significant about this, their same-store sales were off maybe about 4% or something like that. But why, right? Why are people not buying as much Starbucks coffee as they were in the past? I mean, do they just not like it anymore? No. The reason people are cutting back on Starbucks is because they can't afford it, right? They have to make sacrifices somewhere. And so they're giving up that expensive cup of coffee, right? It's a luxury that fewer Americans can afford, or if you can afford it, you just can't indulge in it as often as you did. And I've been saying that on this podcast, that you don't want to own companies that are selling products that people can do without, that they can give up. You got to sell stuff that people need, that people have to buy, that they can't live without. Yes, is a Starbucks coffee something nice? Sure, but you could get a cheaper cup of coffee. You can make the coffee yourself. You don't have to buy Starbucks. And that is the problem. That's what's happening. The standard of living is going down. The cost of living is going up. It's not just that Starbucks coffee is more expensive because they've had to raise the price of coffee. Coffee prices have gone up a lot, but so has, the all the costs of, the cups and, the spoons and the twizzle sticks and the cream and the sugar and, whatever you put in to the coffee, and their labor costs have gone up. So everything about Starbucks business, right? It's more expensive. I'm not really sure about their rents. Commercial real estate's been under some pressure, so maybe they've been able to get a break there. But I think in general, they've had a lot of cost pressures, and so they've had to raise the price of coffee. But it's not just that coffee's going up, because their customers are dealing with rents going up, their utilities going up, their insurance going up, their groceries going up, right? The price of everything is going up, not just the price of a cup of coffee. So the consumers who are confronted with huge increases in prices, they don't have an unlimited amount of money. So they got to make choices. What am I going to give up? Right? And Starbucks is just one of these things that people are giving up. And I think that this is the beginning of a trend. I think Starbucks is going to have a hard time with sales in the stagflation environment that Jerome Powell doesn't want to acknowledge. And Starbucks wasn't the only company, right? I remember Clorox came out and warned, it had a big drop. Remember Peloton, Peloton missed as well. I mean, Peloton's like, who even cares now? Stock's like $3. I remember when the stock was 170, that was the high price during COVID. And that was one of the stocks. Again, I specifically talked about Peloton on this program about how insane that was. People were taking their stimulus money and buying Peloton bikes, right? They were staying at home. They couldn't go to the gym. They got a big check, right? And they bought a Peloton bike. Or, some people were buying now and paying later. They were taking all those gimmicks and say, hey, I can get this Peloton bike for free. So I'll get it during the pandemic. I mean, it was so obvious that that was a temporary, pandemic situation. But Wall Street priced Peloton as if it was going to be a pandemic forever, or even if the pandemic ended, that a big demand for those Peloton bikes was just going to continue. But it was obvious to me back then that it was just another one of those, crazy points in a market. That's why, I talk about Warren Buffett's quote that stock prices in the short run are a voting machine, and in the long run, they're a weighing machine, because people were voting. They were voting for Peloton, even though it was ridiculous. But it really shows you how assets can be mispriced, because you can't look at a price and say, well, that's what the stock is worth. I mean, was Peloton ever worth $170 a share? Well, I mean, somebody paid $170 a share for it, but does that mean that's what it was worth? Well, that was the price. So, I mean, you could have sold it at that price, if you took advantage of it. But price and value are two completely different things. Price is what you pay. Value is what you get. So when somebody bought Peloton and paid $170, that was the price they paid. They did not get $170 worth of value. Today, the stock's at $3 and change. That's the value they got, if it's even worth $3. But it doesn't matter. The markets can get stuff wrong, right? Just like they're getting it wrong on the downside with gold. I talked on the last podcast about the earnings beat from Newmont. Well, this week, Barrick came out and beat on earnings, and they sold Barrick. The stock didn't even go up because everybody was, getting out of gold or, gold-related assets, because they wanted to buy more speculative assets because everything was awesome. There's no stagflation. There's no rate hikes. Why? Well, because Powell said so, right? And so everybody is taking him at his word. But the economic data, the market data, belies everything that he's saying. But the other point I want to make on Peloton is it reminds me of a Bitcoin. Just because Peloton got up to $170 a share, what does that mean now when the stock's at $3? It just means that people were foolish who bought it at that higher price. But obviously, the stock didn't just go there in one day. It rallied from $20, $30 all the way up to $170. And so there were people who bought it at 20 and 30 and 40 and 50 who had huge gains when the stock peaked out. Right? And they all thought they were geniuses. They all thought that they, were great stock pickers. They were wrong. Now, if they sold, they could have made some money because somebody else bought and didn't know he was wrong. Some greater fool paid an even higher price, because even the guys that bought Peloton at 20 and 30 and 40 were wrong. Even though it went to 170, it's at $3 now. Everybody who bought it was wrong, even though they all thought they were right because the price was going up. The price going up didn't make them right. It just meant there were more people who were also wrong, who paid an even higher price than they did. And that is the same thing that's been going on with Bitcoin. And I wanted to bring it up because over the weekend, I did this Bitcoin debate with Zero Hedge. And if you didn't watch it live, we streamed it. It was all over the place, but we streamed it on my YouTube channel. And so if you haven't watched the debate, it's on my channel. You can go and you can watch it there. But there were four of us that were debating. But of course, one of the points that the pro-Bitcoiners always like to make is they point to the price. Look how high Bitcoin is. It's $64,000, right? And therefore, we're right. You're wrong, Peter Schiff, because you've been talking about why Bitcoin isn't going to work. You've been critical of Bitcoin, and the price has been going up for all these years. Well, you could have said the same thing about Peloton. right? Somebody could have been critical of Peloton as it rose from $10 to 170 and said, there's no way these bikes are worth this much money. They're making exercise bikes. They stuck a computer screen on it. I mean, there's no way that this company is worth this amount of money. And that person would have looked like the fool as the price kept going up. And all the people could have said, aha, you see, you were wrong. You made fun of me. You said the stock wasn't worth it at 20, and here it is at 170. All right, well, years later, it's at 3. And the same thing, I think, is going to happen to Bitcoin. I don't know exactly when it's going to collapse. I just know that it will. And until it does, the people who bought it can keep pretending that they were right? Because the price hasn't collapsed to reflect the value. Because Bitcoin doesn't have much value. Right? It has a high price, but it doesn't have any real value. Right? And that's the disconnect. Peloton had a very high price, but it didn't really have a lot of value. It's just that the people paying that high price didn't realize it or they didn't care. And the same thing is happening with Bitcoin. Although I wanted to point out something else about that debate that I think was interesting, and maybe a lot of people picked up on it, and some of them might not have. But so the debate decides. It was me and Nouriel Roubini versus Anthony Scaramucci and Eric Voorhees. And, even though Roubini and I, have both been called Dr. Doom. In fact, they started calling me Dr. Doom before New York Times labeled Roubini Dr. Doom. But we've both been called Dr. Doom. And we both were, critical of the economy leading up to the 2008 financial crisis. So we both were credited for predicting it. But we're very opposite when it comes to politics, really, and economics. I mean, we were both bearish, and we had some reasons in common for making the calls that we did. But we actually disagree on quite a bit. And in fact, when the debate started, Roubini is very optimistic on the economy, and I'm pessimistic about the economy, right? We disagree. So I agree with him on Bitcoin, but I disagree with him on almost everything else. On the other side, one of my opponents, Eric Voorhees, I pretty much agree with him on almost everything he says except Bitcoin. So Eric and I are on the same page when it comes to economics, when it comes to politics. We only disagree on Bitcoin. Now, Scaramucci, right, was much closer aligned to Roubini on politics and economics. So if we were having a debate on the U.S. economy, on the Fed, on inflation, on politics, it would have been me and Eric Voorhees against Scaramucci and Roubini. Those would have been the debate sides. So it's interesting, that you've got, I'm a critical of Bitcoin as a libertarian free market guy, and Roubini is critical of it as more of a mainstream guy, even though he has been negative on the economy at times in the markets. He's far more in the mainstream of economic thought than I am. And on the other side, right, Anthony Scaramucci is a lot more mainstream. So he's kind of a mainstream Wall Street guy who's pro Bitcoin. And then you have Eric Voorhees, who's, free market, anarcho-capitalist, or, laissez-faire, Austrian school, hard money kind of guy like me, and he's pro-Bitcoin. So you have people that are very different politically and philosophically, both, in Bitcoin. And then you have two other people who disagree on a lot of things, who are both critical of Bitcoin. And a lot of people can't understand, hey, how is it that I can agree with Eric Voorhees on so much stuff, but not get Bitcoin? Like how can I not, and I could say the same thing about him. How can he agree with me on so much stuff, yet not see the fatal flaw in Bitcoin? The big value that he sees in Bitcoin is that he can send some of his Bitcoin around the world very quickly. relative to the difficulties that he would face to send a large amount of money through a banking system. And the only reason that that is the case, the only reason that it's easier to send a large amount of money, and you're not sending the money, you're sending the Bitcoin. And it only works if the guy who gets your Bitcoin can sell it and get that large amount of money. But the reason you can send Bitcoin peer to peer is because you're not going through the banks. And the banks are beholden to government regulation. So it's not that the banks couldn't do it just as efficiently. The only reason they won't let you do it is because of government AML and rules that are prohibiting it. So in that respect, Bitcoin has a bit of an unfair advantage in that it's not having to deal with all this government regulation if you're not going through an exchange, if you're just doing it yourself. But that's not an advantage that Bitcoin enjoys by itself. There are thousands of other cryptocurrencies that could do the same thing. And it's also possible that the government is going to crack down on your ability to do that with new laws and new penalties where, it's going to be a lot harder and you're going to face criminal penalties. Maybe the government will at some point say, hey, if you want to send anybody more than $10,000 worth of Bitcoin, you got to file a form with the U.S. government, and you got to tell the U.S. government who you sent that Bitcoin to. You need to get their social security number, taxpayer identification number. You need to get their passport. I mean, who knows? Because all that stuff is coming. More and more regulation is going to come to make it harder and harder to do the very thing that Eric Voorhees thinks is what gives Bitcoin its value. Now, he's acknowledged he doesn't know how much value that is. I mean, what's it worth? Right? He tries to get me to say the fact that I can transfer the money must have some value. It can't be worth zero. Well, I think it's a lot closer to zero than 60,000, especially since, you don't need Bitcoin to do it. There are other cryptos that can do the same thing, and we don't know for how much longer that might be. Now, of course, you can always ignore the government, the laws and risk the penalty. But a lot of the people won't want to take that risk. But I still think that most of the people who are buying Bitcoin, including 100% of the people who are buying the ETFs, they don't care about that. And they can't do that. You buy Bitcoin and ETF, you can't send it anywhere. You're stuck, right? It's no different than buying any other ETF. So what is the value there? There is no value. But another interesting point that I wanted to make, and I didn't get a chance to make it at the debate because I didn't want to go off on yet another tangent. We kept going off on tangents in this debate. But Nero Rubini, when we're talking about the KYC and AML, Rubini is talking about how this is all about terrorists, right? We got to fight terrorism. And I pointed out that no, I mean that's got nothing to do with it. I mean, sure, if they can catch a few terrorists, okay, fine. That's the icing on the cake. The cake is tax evasion. That's what all these governments are trying to prevent when they require all these AML, KYC rules at banks. I mean, terrorism, how many terrorists do you think there are in the world? I mean, there's out of 100 people, how many of them are going to be a terrorist? I mean, very few. I mean, it's a very small occupation, on the scheme of things. And how many terrorists have bank accounts? I mean, very few. I mean, I ran my bank, right, for 10 years before the government shut it down. I don't think we ever, all the KYC we did, I don't think we ever ran across a single terrorist. I don't think there was ever a point where a terrorist tried to deposit money at my bank. Right? It's so small. Now, yes, maybe drugs, it could be a little bit more, drug dealers, there could be some other illicit business, but the vast majority, 90+%, is tax evasion. That's what the governments are trying to crack down on. Now, they don't want to say that. They don't want to say we need all these new laws. We need you to give up all of your constitutional rights so that we can get tougher on tax evasion. No, that's not worth the trade-off. What they're saying is we need to protect you. We need to make sure that the terrorists don't drop a nuclear bomb, in your hometown, right? And that's why you have to give up your constitutional rights. That's why we need all this KYC and AML, because we have to stop terrorism, right? That's just the politics of it. That's how they get the public to accept the loss of freedom and the extra, regulations and loss of privacy and all that. So I pointed this out to Rubini that, don't buy this nonsense about terrorists. It's just tax evaders. And he was like, well, I want to make sure we get those tax evaders because I'm paying my taxes. I don't cheat. I report everything. I'm paying 52% of my income in taxes, and I want to make sure that everybody else pays, because it's like, so in other words, he wants to make sure that everybody else is screwed as badly as he's getting screwed. He doesn't want anyone else to get away with paying less when he's paying 52. Although he also said that he's happy to pay it. Like he's glad that the government is taking more than half of his income, which to me is absurd. I mean, there's no way somebody could be happy about that. And then he was critical of people who moved to Puerto Rico to lower their taxes. There's nothing illegal about moving to Puerto Rico. It's just a perfectly legitimate tax deduction. It's no different than the home mortgage deduction. I'm sure Rubini, if he has a home mortgage, he deducts it. If he has any charitable donations, he deducts those. There's all sorts of deductions that people use to lower their tax liability. So one way you can legally lower your tax liability is to move to Puerto Rico. I'm sure Rubini takes advantage of whatever other tax deductions he has. I'm sure if he has an accountant that does his taxes, he doesn't tell his accountant, hey, don't take any of my deductions. I want to pay the maximum tax that I possibly can. I don't want you to reduce my tax because I like paying taxes, right? He was like, hey, you don't like paying high taxes, leave the country, right? You don't like paying 52% of your income in tax, get out of here, right? The country was founded by tax protesters. The country was founded by people who didn't want to pay a tiny tax to the British crown, right? I mean, there's no way King George would have ever imposed an income tax on the colonists. He would never do something that draconian. No, he's talking about excise taxes, taxes on tea, taxes on stamps, little things. And we had a whole Revolutionary War because of those tiny little taxes. And now we're supposed to accept 52% or get the hell out of the country. I mean, that's a huge disagreement that I have with Nero Rubini. No government, I don't care what's going on, no government has the right to take half of what somebody earns. I mean, not even close. I mean, in the Bible, you tithe 10%. 10% is good enough for God. The U.S. government's supposed to take 50%. Think about medieval serfs. You know what a serf paid to its lord? 25% of what they produced went to the lord. So a 25% tax rate made you a serf. And Nero Rubini is happy paying 52%. What the hell does that make him? He's a slave. He would have to be emancipated, right, to rise to the level of a serf. So this is all ridiculous that somehow it's a sign of patriotism to pay these high taxes, and that these high taxes are just. And if you don't like paying them, you should leave. Now, I'm not telling people to illegally evade them, but I think people should do whatever they can to legally minimize them and avoid them. And I also think we should do whatever we can to get them legally lowered. Taxes are much too high. Unfortunately, they're not high enough relative to what we spend. So we need to dramatically cut spending. See, Rubini is happy paying for all these taxes because he likes the government spending all this money. I don't. I want the government to stop spending all this money so they can lower taxes. I want to live in a free country. I don't want to live in a country with a bunch of serfs or lower than serfs, where you have government taking 50% or even close to 50% of their income. And I want to wrap this up. One more point that I didn't make last time when I was talking about my bank and how they shut down the bank. What I forgot to point out, so I mentioned in my last podcast that I found out through the Freedom of Information Act, and I got to file an appeal now to get all the stuff they redacted, right? The hundreds of pages, blank pages they sent me. But I found out that there was a secret deal to shut down my bank. at least 3 months before the bank was shut down. So I didn't know about the secret deal. Nobody at the bank knew. My bank's lawyer didn't know. None of the people at Quinta who were trying to buy the bank, because for 3 months, we were all operating under the assumption that the Puerto Rican regulators were being honest with us and that they were still evaluating the sale of the bank and that they were still going to approve it, that it was still on track for approval. They were just vetting the buyers, and they were really good buyers, right? So there was no problem there. So we were all assuming that the bank was going to get sold. Little did I know that the IRS and the local regulators reached a secret deal to shut my bank down 3 months later. Now, the pretense that was used to shut down my bank was that it didn't have enough capital, right? To operate. And so the depositors were at risk because my bank didn't have enough capital. Forgetting about the fact that those rules were written for banks that make loans, and I didn't make any, right? How could any of my customers have been at risk when the bank had no loans and no debt? All their cash was sitting there. But if it was true that my bank didn't have enough capital and the customers were at risk, why wait 3 months to shut down the bank? Why wait 3 months to put it into receivership and appoint a trustee? If you're doing it to protect the customers, why expose them to another 3 months worth of risk? Well, here's the reason. The J5 celebrated its 4-year anniversary on July 1st. And the reason that they waited 3 months was because they wanted the closure of my bank to commemorate the 4-year anniversary of the J5. That's why they waited. Because if you look at the emails, they had scheduled my press conference or the press conference to announce the closure of my bank on June 30th / July 1st. So those were the 2 days. Why? Well, those were the 2 days that were right on the anniversary. And if you look at what IRS Chief Jim Lee, who's no longer chief because he resigned and he's now in the private sector, but he began his opening remarks by saying, 4 years ago this week, we started the J5. So the reason that my bank was shut down, it had nothing to do with capital. It was shut down as a PR stunt, and the date was picked by the IRS to coincide with the 4-year anniversary of the formation of the J5. That's it. So all my bank's customers who have been without their money for over 22 months, the reason you don't have your money is because the IRS needed the PR. They needed to show that they had something, that they did something, that the J5 did something when it did nothing. Right? They had to pretend that they shut my bank down for tax evasion and money laundering, even though their own investigation found no evidence of tax evasion and money laundering, and neither did any other investigation. But also, as added proof, as if I didn't need more, that the pretense that my bank didn't have enough capital was the reason that it was shut down. If the local regulators in Puerto Rico made a secret deal with the IRS in March, early April of 2022, to shut down my bank 3 months later because it didn't have enough capital, 3 months later, you would think that at some point during those 3 months, somebody from the Puerto Rican banking regulators would have contacted someone at my bank, if not me directly. I mean, they know how to reach me. They know how, that my lawyer, who talks to them all the time, they're talking to Quinta. I mean, we're all trying to get the deal to sell the bank. If they know they're going to shut it down in 3 months because it doesn't have enough capital, you would think somebody from the government would contact the bank and say, hey, you know what? In 3 months, we're going to shut down your bank. In 2 months, we're going to shut down your bank. In 1 month, we're going to shut down your bank. And the reason we're going to do it is because you don't have enough capital. So why don't you put some capital in, right? So because then we won't have to shut you down, right? You just don't have enough capital. So put some capital in. The reason they didn't give me the opportunity to put capital in is because they wanted to shut the bank down. Why? Because the IRS wanted it shut down. So they had to allow it to operate without capital for 3 months so they can then shut it down for not having enough capital. And what makes it all worse is about 4 months before the commissioner secretly decided to shut down my bank because it didn't have enough capital. I offered to put in $7 million of capital. I sat in her office and said, I'll put in $7 million of capital right now. I'll write a check and I'll deposit it into the bank, right? Pending the approval of the sale. Because the sale to Quinta was obligated as soon as the commissioner approved the sale to put in $7 million. Now, the bank was only short by maybe $3 or $4 million. So there was a big cushion there. And I offered to put the $7 million in myself. And she said, no, don't do it. So then a few months later, she decides that she's going to shut down my bank because it doesn't have enough capital, even though I offered to put in millions more than it needed, and she told me not to. And nobody calls up and says, hey, Peter, I know we told you not to put in any capital, but if now we've changed our mind, and if you don't put it in, we're going to shut the bank down. No. They let it operate for 3 more months, and then not only shut me down for not having enough capital, but fined me $700,000 for operating the bank without enough capital. When I offered to put it in. And the biggest other irony of the whole thing is, why did the bank lose a lot of money? It was because the same government that forced the regulators to shut down my bank leaked the investigation to the media. And the media reported not only that I was being investigated, but that I was guilty. And that caused the bank to suffer all these losses. I lost millions and millions of dollars. And that's what impaired the bank's capital. Then the bank gets shut down for not having enough capital. And now the government says, oh, you see, our investigation was a success because the bank got shut down. It got shut down because you leaked the investigation before it exonerated the bank. And the whole thing, I was reading all these articles again, every single article the next day, bank shut down for money laundering, tax evasion. Not once did anybody in Puerto Rico, any of the regulators, push back against that narrative and say, no, that's not the reason it was shut down. They were happy to have helped create that false impression because that was what the PR stunt was supposed to do. The reason that they wanted to commemorate the anniversary of the J5 by shutting down my bank was to pretend that they were shutting it down for tax evasion and money laundering, because that's why the J5 is there, right? To ferret out and to put a stop to tax evasion and money laundering. So they shut down my bank as proof that they're succeeding, even though there was zero tax evasion and zero money laundering going on at my bank. And in fact, the worst allegations were from this guy at the United Kingdom, from His Majesty's Revenue Service. I mean, I actually tweeted out, I didn't even find that until a few days ago, a video. He posted it on his LinkedIn page, and I hadn't seen it. And he basically flat out said, yes, we took out this bank. We, meaning the HMRC. He took credit for taking out my bank, right? Working with OSIP to take out my bank because it was facilitating tax evasion and money laundering. He flat out said it, that's why they took it out. They took it out because it was doing it. And it was all a lie. In fact, as far as I know, not a single one of the bank's 500 plus customers in the UK has been found. It's been now 4 years. They haven't found one incidence of tax evasion or money laundering by any of the British customers of my bank, right? So the whole thing was a PR stunt, and it just makes me madder and madder, and especially with the customers now who still don't have their money. Some of them, a significant percentage of their savings that have been unnecessarily trapped in my bank. But this is the type of government we have. It's a lawless government. They think they can operate above the law, that the laws don't apply to them, that the minute you work for government, you have carte blanche to do whatever you want, right? That we're no longer a nation of laws. We're a nation of men, and very corrupt men who are above the law. And so far, the courts seem to be backing them up. That's the type of government that we now have. And, Eric Voorhees and I, we would completely agree on all of that. And we're looking for alternatives, looking for some way to push back. I just don't think that Bitcoin is part of the solution. Ultimately, it's going to be part of the problem. Part of the solution to reining in government is a return to sound money, a return to real money. And unfortunately, Bitcoin doesn't fit that bill, but gold does. Anyway, that's it for today's podcast. Stick around. I'm sure I'm going to do more podcasts during this week. I'm not traveling. I'm here in Puerto Rico for the next couple of weeks, so it should be easier for me to do these podcasts. In the meantime, if you like this one, give it the thumbs up on YouTube, leave a comment, and if you haven't subscribed to my channel yet, make sure and do that, and tell your friends to do the same thing. Bye for now.